Our last look at Woolworths was just in the early stages of this sideways consolidation, and the ideal situation was to break up, hit the upper trend line of this large symmetrical triangle, and then to get another probe to the downside. So thus far, certainly on track. The only caveat in regard to getting our wanted brief leg lower is the fact that we did see a very strong session a few days ago. This bar right here, I believe this was the results, half-yearly results, obviously well received by the market, large percentage gain, high close, ultra high volume, and from that juncture, at least on Friday, another strong leg, and even today, although we did see intraday weakness, another nice high close. So the ideal situation is to see 5 internal swings within this triangle, and at this juncture we only have 4. So remember, an Elliott triangle needs to contain those 5 internal swings labelled A through E. So we have a 3-wave movement up to wave B, exactly the same down to wave C. And if we do reject from these slightly higher levels, another 3-leg move. Now, it isn't a prerequisite to hit the lower trend line of a triangle in this type of pattern. What we can see is a truncated wave E, quite a common occurrence actually, so somewhere just beneath $34 would suffice. That would complete those 5 internal swings, and this would be a very good buying opportunity indeed, following signs of strength, although of course the trigger won't come until we break up through the upper trend line of the pattern. So if you are looking for an opportunity here, a little patience is likely going to be required. We are wrong about the final probe down if we break straight up through the upper boundary of this triangle sooner rather than later. Let's say a line in the sand at 35.50, break up through there, and I would suggest that our wanted brief dip isn't going to materialize, and that will leave us with a more conventional triangle, 3 waves, or 3 legs should I say, A, B and a wave C, and then zip higher from there. But certainly from an Elliott point of view, I would like to see one final decline, not significant, but just down toward that 33.50 region, and then, like I say, good buying demand down at those lower levels, and there's no reason why we can't see a significant leg higher, taking us well above what's actually shown on the chart here. Now, as far as the larger degree wave count is concerned, it does seem likely that a very large wave 1 is firmly in position. Now, technically, Elliott purists will tell you that wave 2 can never form a triangle. Certainly in my experience they do. Not a common occurrence, but it certainly transpires from time to time. That's exactly what I'm looking for here. But of course, if we are seeing a wave 3 high from these lows, then certainly plenty of upside potential ahead within a multi-month, if not multi-year trend to the upside. So from a trading perspective, no reason to jump on right here and now. If we do get the final dip, then I'm certainly looking for a buying opportunity in a few weeks' time. But even if the upper trend line of the triangle is penetrated immediately, every reason to go with it. Like I say, 35.50 would be a logical entry point. That would mean that we're not going to get knocked out of a fake out type pattern, so break up through the upper boundary of the triangle, and then to see an immediate retracement, get up through 35.50, and it should be onwards and upwards. And as I said, plenty of upside potential over the longer term.